Hey everyone, I'm so excited this morning. I am joined by Hermie Talamentez. See, she is the lone hunter, and she's been in this industry for, gosh, how long now, Hermie?
Oh, a little over 30 years.
Yeah, so she definitely knows what she's doing, and she's going to help me guide you to what moves you. The whole point of this is there's the life has changed so much recently, so quickly. It's like from one day to the next, there's a new change. But we just wanted to kind of give you an idea of what's going on in the real estate industry, in the real estate world, and how it all fits in what's going on right now in just society in general. So, Hermie, what's the biggest change that you've seen over the last 30 days?
Well, the last 30 days, especially when we started with this COVID outbreak, it kind of froze everybody for a couple of weeks because investors were kind of afraid to do mortgages for just a minute. They had increased minimum credit score requirements. They had decreased debt to income ratio requirements. And so the programs that we were used to doing all of a sudden no longer existed. And it wasn't so much that the guidelines had changed, it's just the investors chose not to take a risk. And the reason for that is when they were, really, these are mortgage backed securities. And so when they were hedging their bets, they were hedging that, rates would be low and unemployment would be low. And now unemployment is high. And so they've tightened up the requirements. So that was the biggest change. But then we've loosened up. And so it's almost back to normal, which is great because it's obviously a great time to still buy. But
Mm.
where it was tight for about 2 to 3 weeks, it's loosened up. So that's good to see.
Oh, good. So, are you seeing like a credit scores where the requirement that, because I'd heard that the requirement in credit scores had gotten really, really high. Has that gone down at all, or is it still a little bit higher than what it was prior to all of this happening?
So we had gone up to 680 as our minimum credit score, but that was just for a
Hmm.
few days. Then it went back down to 660. Then it went back down to 640. We're now at 620. Uh,
Okay.
but and we're seeing a little trend too for some of the companies that were not changing because there were some that was business as usual. And for
Hmm.
those that were not changing, we're finding that now they're upping their score because they may have taken a loss. And so
Oh.
we're finding that those companies are now tightening up where there's others that are loosening up. So it's important to check with the lenders. The banks are doing things a little bit differently, the big banks. And so it's important just to shop around right now because you may hear something from one lender and that is not blanket policy. So it's best to talk to a couple of them just to see what they're offering. Because if you hear a no over here, doesn't mean it's going to be a no on this side. So it's best to look around.
One of the things I also heard, and just correct me on this, is that the need or the requirement for additional savings had become something that you guys were looking at. Is that true or no?
Yes, so that was one of the requirements too, where you would have additional reserves, 2 to 3 months reserves. There are some that were asking for 6 months reserves, but that requirement
Wow.
for us right now is gone. So it's almost business as back to normal here because we no longer have that reserve requirement. Those were really on the government loans. So the government
Hmm.
loans, your FHA loan, your VA loan, and your USDA loan were riskier now. And all of a sudden they said, well, we want to make sure that they have enough money that these loans don't go into forbearance. And the reason for that, again, it's mortgage-backed securities and the investors you do not, after you close on your home, you do not want a first payment default. If your house goes into forbearance and you ask for help, then it's going to hurt you because you're going to at some point want to buy a new home, hopefully, or refinance. And it's going to be impossible to do it because of that forbearance. And so that was the reason that they were looking for reserves. However, that requirement is gone now.
Okay. All right. So if I am a buyer who could be like on the edge where my credit scores are concerned, what would you say to me?
Well,
Like say I just have 620. What would you say to me?
so what I would say to you is that there's still products available for you. There's still FHA products available at 620. There's still a
Hmm.
conventional loan that's available to you for you at 620, and USDA loans available. So all the programs are still available. Now it's whether you're going to get approved or not. That's the question. So we would have to take a look at your credit, take an application, and make sure that there is strength in that credit score. And if we needed to bump it, so a lot of people don't know that pricing, your rate is going to be dependent on your credit score, your loan amount, the term, and the type of product that you have. So if there's a way to, let's say, increase your score by 20 points, what I'm going to do is analyze your credit, and I would make a recommendation or a suggestion to you. This would be better. If you could pay this credit card down by $200, you could boost your credit score 20 points. And by
Hmm.
doing so, you're going to get better pricing. So it's just
Okay.
better, we take a look at that application, we look what our consumer has available to them, and then we kind of craft a solution for them. So it starts with the application, and then let's see where you want to be, go. How quickly do you want to buy? Is it worth waiting another month or two while you kind of self-correct some of the credit issues? But everybody's different. So
Right.
yeah,
So you would say just start the process. That would be the thing.
it all starts with a process. It all starts
Sure.
with the application. We have to see all the pieces of the puzzle. So we take the application, we look at the credit, and then after we look at the credit, then we look at debt to income ratio. So
Okay.
one of the things that changed was also debt to income ratio requirements, where we were on an FHA almost able to go up to 50% your debt versus your income. They tightened that back down to 43%, which means they
Okay.
have less buying power. But now that's loosened up again. And so we want to, some programs do not allow you to go over 50% debt to income ratio. So again, we look
Hmm.
at those things. We look at the credit score. We look at your debt to income ratio, and that's going to qualify you. I've talked to a few clients, Christine, where maybe they were with a builder and the builder said, well, this is all you qualify for. They might have had a restriction at that time, and they go somewhere else and they said, well, I'm approved for another $15,000, $20,000. Why? And it may be because there was a restriction at that time. So it's important to go back and check, what am I eligible for now? Because those restrictions have been lifted in a lot of places.
Okay. That's good to know. That's good
Yeah.
to know. So, Hermie, what's the biggest myth people have about being getting approved for a loan?
The biggest myth is they think they have to put a huge down payment. Some people think they have to put 20% down. There are programs for our veterans which are 0% down, and USDA programs also 0% down. There's some first-time home buyers where you only have to put 3% down. And of course, there's down payment assistance programs as well. So a lot of people think that they have to have a lot of money saved up and
Hmm.
before they can even think about buying, but that's not the case. So again, everybody's situation is different, and let an expert take a look and craft that solution for you. But that's one of the biggest things. Or people may think that my credit is bad, and for some people, their credit is bad if they were late one time, maybe 2 days late, and everybody again may think that their credit is bad, but it's not. And vice versa. Some may think, I have perfect credit, and there's some things that we need to work on. So it's important
Sure.
that we start there so that we can go over that credit report, because there's so many items that are on people's credit report that don't belong there.
Okay. All right. So I have a question now. This kind of, I think you might have already actually addressed this, but what would you say would be the first step in preparing to come to you and preparing to buy a home? What would you say would be the first step?
Well, hopefully then, I get referred to them by you, Christine, because you've been helping them find a home, right? So
Right.
they've already got the interest. You've already piqued their interest. You've got them excited about buying a house, and so they're coming to me now because you're referring them to me. And the first thing that they would do would be that application, because you cannot show them, homes unless you
Hmm.
know that they've been pre-approved. And
Right.
so after we take that application and we know what program we're able to offer them, then we would need to take a look at their income and assets. So what I ask for is their pay stubs for the last 30 days. They have to be consecutive. Even with COVID and the current situation right now, people are just now going back to work. So we'll
Hmm.
accept one paycheck stub, but we want to see the previous ones as well. We need their W-2s for the last 2 years. If they are self-employed, we'll need the tax returns for the last 2 years. If they're a corporation, then we'll need the business tax returns as well. The K1, the 1120S, so we'll need those. We need bank statements for the last 2 months, and we need the complete bank statement. The things that we're looking for on the bank statements are large deposits. So anything that's, a large deposit, we would need to source, did it come from a family member? Are we using gift funds? Did you get a big bonus? So anything that is unusual, we want to source. And so we look at
Hmm.
those bank statements, because this is going to be the proof of your down payment, that you're eligible, that you have enough assets to have the down payment and cover any closing costs that maybe the seller's not contributing to.
Okay. All right. Um, so I'm coming to you. I filled out the application. What's next? What does the process look like between the time I come to you and the time it gets to closing?
But what happened is I get you the pre-approval, and I will send you a fee sheet so that you can know the fees that are going to be expected with the loan. Be prepared to have some money put aside, one for your down payment, one for your appraisal, one that which you will pay out of pocket. You're going to pay that up front. Having funds available for your inspection, your termite inspections, and your regular home inspection. So have funds available for that. Once we enter into an agreement, and you've done a great job negotiating some closing costs for the buyer, and we're ready to go, then what happens is I get the contract. I am going to send disclosures out. So everything's electronic these days, but what works for you. If you want to come in, sign disclosures, most people e-consent so that we can send disclosures electronically to them. And that is very important. They need to give us an intent to proceed, to let us know that they want to go on with this loan, because that's what we're going to need in order to order an appraisal. So we also will send out a borrower's authorization and the credit card authorization right after disclosures, so that we can begin the verification process of employment and anything else that we might need to verify. Maybe we need to speak to a creditor on your behalf, and we have your borrower's authorization on file. And then the credit card authorization, which will allow us to order the credit. It will not be run until the actual appraisal comes in. During this time, we've already gotten your documents. So it's ready for our processors, and it's ready for our underwriters to send. And it takes about 48 hours once we send it to the underwriter. And this is a conditional approval. So the underwriter is going to take a look at it, and they're going to say, approved subject to additional conditions. And it may be explanations of that large deposit. It may be explanations of inquiries that are recent. It may be explanation of addresses. It may be an explanation of a gap of employment. We try to cover everything as a loan officer. We try to think like an underwriter what they may need, so that we're asking very little. so that it's making the process run smoothly and it doesn't seem like you're jumping through hurdles. Once we have that and we've collected all this, in the meantime, we have people in the background, our partners, who are ordering the appraisal, ordering the title, um, ordering the homeowner's insurance, so that we're listed as a lost payee. And then once we gather everything and the appraisal comes in, the appraisal we review with the borrower as well, because we want to make sure that it's at value, and we want to make sure that there are no repairs needed. So sometimes the appraisals come back subject to repair. So we just want to make sure that that is okay and that there's no issues with that. Once we have all of that, it is ready for what we call clear to close. So we can get a final approval, and then we schedule the closing and they get the keys. I love that we table express. So what that means is the borrowers go in, we're not waiting for authorization numbers or anything like that. So they're already authorized to fund, and they can get the keys to their house right away. So it's a process, because sometimes we are waiting back from employers to verify employment. A lot of things are systematic and automatic, but if we have to do something manually, then it could delay the process. Right now, it's really hard to get appraisers out there. They're a little bit afraid, and I can understand why, but they're having to go into homes right now. And, I have a question for you, Christine, in
Yeah.
just a second, how does that work? But then once we get the clear to close, we're ready. And it can take anywhere from, 2 weeks to 30 days. But are you seeing anything, different right now with, people going into homes, and what does that look like for the realtors?
Well, from the realtor and client perspective, I mean, if your home is for sale, you obviously want people to come through and see the home. When I have my client, as a buyer, I have protocols of what I'm planning to follow and what I'm asking them to follow. And one of the protocols is to wear a mask in the home, to not touch anything. Like, I'm going to touch stuff, they don't touch anything. And sanitize before they come in the house. So I have like a hand sanitizer for them, and sanitize after they leave the house. So those kinds of things. I even go as far as giving them like booties to put over their shoes, so that they have a sense of security for themselves, and the seller has a sense of security. Now, from the flip side, I also do that with my sellers too. Now, obviously, if you're selling your home and you're living in the home, you do want a sense of safety. And there's nothing that's foolproof, obviously, but I'm going to try and, like, things like leaving closet doors open, leaving some cabinet doors open, leaving doors open that maybe typically would be closed, pulling out a drawer, that kind of thing, so that so no one has to touch anything. So the whole point of everything is that the least amount of contact you can come into surfaces, it's going to be the best for everybody involved. Again, and these are things that I sit down with my seller and I say, this is what I'm planning to do for you. So the same thing that I'm asking my buyers to do, I'm also going to be asking other people's buyers to do, as well as just making sure that they are leaving things clean, sanitizing things prior to the showing, and sanitizing afterwards for their own safety. Because even though I say I'm the one who's touching, there's no guarantee. The other thing too is the only people that can come into homes at this point that I'm involved in are people who actually are on who are represented, there's a buyer's representation agreement, and they're one of the parties who are going to, or both parties for that matter, who would be making that final decision. So we're really asking, like, children, if at all possible, not to come in the home. And if you're, so nobody beyond the people who are actually making those decisions. And if you're an elderly person, we're also asking, or somebody who might have any kind of underlying health issues, who is not a buyer, or to not come into the home.
Mhm.
So those are some of the protocols that we're really trying to work with right now. And you know what, the thing is that there's sellers and there's buyers out there, and San Antonio, and nothing has changed to that degree. There are people out there. In matter of fact, I believe it was March, we had like one of the most successful markets over the last 4 or 5 years. It was
Mhm.
really strong market. There were so many people who are out there who were wanting to buy homes, and nothing has changed. I
Right.
think what might actually happen, and this is going to be something that you're going to see reflected in your sales price. The stock market has come up and down.
Mhm.
Real estate hasn't done that. Real estate has never done that kind of thing like the stock market does.
Right.
It's a solid investment. My mother and my grandfather used to always say, they're not making more earth, they're not making more,
Yeah.
that kind of, yeah. So those are solid investments. And in San Antonio, what we're seeing is that particular home prices are really, really strong and are going to continue to, as in terms of the need for homes within that price range
Mhm.
and the competition for homes in that price range.
Mhm.
Those are really strong. And that's one of the reasons why we've seen over the last, I don't know, since probably 2010, 12, where we've seen our house prices have gone up so much over each year.
Mhm.
And nothing has changed there because we still don't have as much sellers as we do buyers. We don't have that much inventory. And
Right.
particularly right now, when people might be hesitant to put their homes on the market, that even impacts inventory even more. But it's going strong out there. It's happening out there. And even during like the peak when we were really shuttered in, people were still finding a way, whether a homeowner would do like a video walkthrough and send the video to somebody, to a buyer. People were doing things like that. We find a way.
Where there's a will, there's a way.
Yeah,
So
exactly.
if in the next 6 months or so, Christine, if I decided that, I wanted to sell, where do I start? What do I do?
Well, you know what? It's never too soon to contact a realtor. Actually, the earlier you can do it, the better. Because what you do is you put yourself in a position where you can, a lot of times people want to do it. They've got delayed maintenance. And you can do all of this stuff in one fell swoop and feel the cost of it, or you can actually take it in projects and spread it over a period of time, and you're not feeling the financial cost of it quite as deep, at least not at once, and have a realtor come out and take an assessment of the home and say your biggest bang would be putting money in here. You're going to get a return on investment if you put money in this area versus putting money in that area. What is this? We're in May right now, and we know how San Antonio weather is like. What we had rain just yesterday, and probably we will be for the rest of the week. But come June, July, what's the weather going to be like? What's our yards going to be like
Mhm.
primarily?
Yeah.
So doing those little things that's going to make your home beautiful. Those curb appeal things,
Yeah.
taking the time to do curb appeal things, and probably doing things that can, especially if you're thinking way down the road, say you're putting your house on the market, say in August, which we know weather-wise in San Antonio, we tend to be drier, your grass is starting to look a little bit brown. What are the things you can put into place right now that can sustain itself until then?
Got it.
Um, so just and to just have a professional come out and take a look at your property. The other thing too is I really would highly recommend that a seller actually have a home inspector come out and take a look at and just go through the property. Yes, it's an extra investment
Hmm.
into it, but it's well worth it, because the thing is that once buyer sees something that needs to be done, they calculate their calculation of cost and true cost tend to be different,
Yeah.
you know, so they can decide that, oh, I'm not going to give you full price for your home because X, Y, and Z came up on the report. So therefore, I want these things taken care of. While as a homeowner, if you just do these maintenance things that come up, you some of those things can be just things that you as a homeowner can do, you know, handyman things. Some of them, it might be you might need a professional to come out and do it, but address those things prior to putting the home on the market. That way you're putting a home on the market with as clean a report as you can get.
Yeah.
It really does help in the bottom line. It
Yeah.
truly does. So having that inspection and having the time to actually address some of those items on the inspection list is well worth it when it comes to getting that full price for your home.
Yeah. I
Yeah.
heard this, and tell me if it's true or not, that um, when you're getting ready to sell, that you should remove personal items, you know, because you want to become detached from that home, and you want to see the buyer envisioning themselves with their own family pictures and things like that. Is that true?
That is absolutely true. Because, you know, the thing is that the way we live in a home and the way a home looks when it's being sold are two different things. Particularly if, say, you've got very flamboyant tastes and colors. And it's so funny how a can of paint can be like a deal breaker. And I've seen it over and over and over where a buyer comes in and they just don't appreciate those flamboyant colors. And so because of that, all they see is work in their future. That's all they see. And they get so distracted by that color choice that they can't even see the great benefits and attributes of the home.
Yeah.
So it's really, really worth it to you to get the home as generic as possible. And you have to remember, you are wanting to move to another chapter of your life. You are not stuck in this chapter. Your whole point is you're trying to take whatever's going on in your world right now and move it elsewhere. So to start to detach is so important. And honestly, it helps you in the negotiating process too, because it doesn't feel like somebody is slandering something so personal and sacred to you when they come and they give you a price that you think is insane. You know, you can at least say, you know what, okay, that here's your idea of what the home is. We've done our market research. We know the home is worth more, and you can be more detached instead of emotionally involved in the whole negotiation thing. I mean, we all want what we want for the price we want it, right? But that doesn't mean that, you know, but that doesn't mean that you get so emotional that you can't see beyond the circumstance of that offer.
Yeah.
And it helps. Yeah. So it helps really. The whole thing about taking just depersonalizing the home is so it makes a big difference, and that actually sells homes faster. They're homes that are so personally reflective of the owner that somebody walks in and they cannot begin to see themselves in that home.
Mm-hmm.
Yeah.
I think that's important, that, you know, as a realtor, that you're kind of helping them envision all that too, you know. So that is so awesome when you do that. I love when you do that, because you help people envision where they want to be, and, you know, just, and that's so cool, and they can start seeing it, and you see the smile on their face.
Yeah.
It's a great feeling. It's a really great feeling.
It is. It actually is. And one of the things that I actually do with my home, with my sellers, and I, it's like I will go room to room, and I actually, and it's sometimes challenging because you don't want to upset anybody. You don't want to diminish the amount of love and care that they've put into the home. And so it's really, but I'll go through the home and I'll say, okay, if you do the furniture like this instead of that, if you'd get rid of this item instead of that item, you know, or just to make it more, I don't know, something that somebody's going to walk and be excited about.
Mm-hmm.
And you get to move on to the next thing in your life.
Absolutely, absolutely. I think right now we're blessed to be in this industry, you know, to be able to sell and buy homes, and to help
Absolutely.
people get that financing for that home. This is one of the most sound industries right now, you and I as a team, we navigate and the fears and expectations of our buyers and our sellers. And so it's so important that what we're doing right now, that we're still impacting lives. Like you said, people are still buying, people are still selling, life is
Hmm.
still going on. And it's important that, you have somebody like yourself helping a buyer or seller through this process.
Well, Hermie, it's been always been great to work with you because you're really straightforward. You're a straight shooter woman.
I'm sure.
And you tell people in a gentle way where they need, how they need to get from point A to point B. And
Mm.
sometimes getting to point B may take a little bit longer for some people, and some people it could be tomorrow. Point B could be tomorrow. And I think it's important that what I've always enjoyed about working with you is that you don't sugarcoat it, but you're not brutal, but you don't sugarcoat it. You give the people the information that they need so they can make the right decision. And I think that's important because this is going to be one of the big, well, for if you're it's one home owning a home is one of the biggest investments you're probably going to make in your life. And so you can't make those good decisions without the information. So I thank you so much for not only being with me today, but just working with me and being part of my team.
Oh, you're more than welcome. I enjoy working with you, Christine, because it's always fun, and we always have great stories with the people that we've put in homes, and I enjoy it. I enjoy crafting the solution. You give me the problem, or this is where we are, and I said, let's craft a solution. Let's make it happen. And it's important that people understand that a no today does not mean no tomorrow or 6 months from now. And,
Yes,
and
absolutely.
there are lenders out there that will say, no, I can't help you. And the buyer never knows why. Why can't you help me? Or, they just take the no. But it's important for me for them to understand what's on their credit, what we need to do to get prepared. And, like point B, like you said, is today, tomorrow, 6 months from now. So we got to stick with them. We got to make
Yeah,
sure that we get them in their home.
absolutely.
Yeah.
Well, you guys, if you have any questions, I'm going to have Hermie's contact information. You can go directly to her, or you can contact me, and would be more than happy to just help you through the process. Hermie's the lone hunter, and I'm the guide to what moves you. So you guys have an amazing day, and hope to hear from you soon.
Thank you. Bye.